All right, this is Brent with Trade Therapy, and welcome to the Trading Couch. We are talking about Palantir Technologies. PLTR was our clarity spotlight last week, and in it, we had mentioned that if we held a position in Palantir, which we do not, but if we did, we would be raising our stops and looking for signs of profit taking because Palantir was getting up into the range where historically Wall Street and institutions take profits, and specifically that's this 1618 Fibonacci extension on the all-time chart here. And we published our spotlight on Sunday. And the very next day, Monday morning, headlines broke about the Department of Defense looking at AI companies as a potential replacement for PLTR. These headlines are noise. It's just an example of Wall Street weaponizing narratives and weaponizing the media to accomplish their goals, as if the Department of Defense didn't do any due diligence before committing billions of dollars to Palantir in the first place. Of course they did. So this is just another example of Wall Street using the media. If we jump into this chart here, this chart is from March 7th, the last time we spotlighted Palantir. At the time, we were focused on this wave 3 rally coming off of this back test of the 55-week exponential moving average, this red line right here, which also happens to coincide with the 618 Fibonacci extension. Once it back tested this level, you can see it went on this almost vertical run here, where all of the pullbacks are very quickly absorbed. It held all of the shorter term moving averages. This is an example of what a lockout rally looks like. All of the shallow dips get absorbed almost instantly, leaving retail traders behind. The ones that are waiting for any sort of a pullback or waiting for a good entry, they get left behind. This is when Wall Street and institutions flip the switch from accumulating to rapidly moving price away from their entry levels. This is how they protect their investments. And it's a great example of how institutions will condition retail traders to believe that Palantir is unstoppable. Moves like this set Wall Street up to take profits later because retail traders believe that nothing can stop Palantir, nothing will ever stop this uptrend. And if we jump into a current chart, this is from last week, July 25th, we can see wave 5 now extending up into that 1618 extension level here. Anytime we suspect an Elliott wave 5 is completing, we want to look for bearish divergence, bearish or negative divergence, which we see present. This is relative strength index divergence. What this means is that the momentum is fading. The bearish divergence is just a sign. It doesn't mean that Palantir is going to top tomorrow, but it does mean that we're in that range where profit taking usually begins, and we are seeing momentum beginning to fade. Because institutions have conditioned retail to believing Palantir's unstoppable, it sets up really nicely for what we call a climax rally. Those of you that have been following Trade Therapy content for some time know that going into the presidential election last year and seasonal volatility during September and October, our firm, Trade Therapy, took a short position on the semiconductor sector and the Mag 7 because we believed that they were ready for reaccumulation, which they were. But we did not take into consideration a climax run that extends above this level, above the historical profit-taking range, to draw in retail traders that have been conditioned to believe that Palantir, that nothing can stop them. If we zoom into a daily chart, this is what that would look like for Palantir. If we take just a Fibonacci extension off of this local wave 4 here, we can see that an extension above 157 would likely end up around 186 here. This is the level that we would be on the lookout for. These climactic rallies are typically associated with some sort of a bullish headline, encouraging retail traders to come into the trade that already believe that Palantir can't be stopped. So we would be on the lookout for obvious signs of distribution that would come in the form of small bodied candles. If I jump back over to my all-time chart here, it's a perfect example of what that would look like. At the end of the last rally, the initial rally out of IPO produced this small little bodied candle on the weekly with this long wick on top of it, done on high volume here. That is distribution. That's what it looks like when Wall Street takes profit. So that's the type of candle that we would be looking for a climax rally to produce. Doesn't mean it's going to happen tomorrow, but that's what we would be on the lookout for. Those are not bullish continuation candles. That's distribution. That's Wall Street unloading into euphoria, which is typically associated with that bullish headline that extends the climax run. So we'll be on the lookout for that. This retracement here, this reaccumulation, it typically will come in some very quick V shape. For a hot asset like Palantir, I would expect to see a very quick and sharp pullback that it recovers very quickly out of, allowing Wall Street and institutions to recognize their gains, to take profit, reload their position at lower levels. That's what we'll be keeping an eye out for. It should make for a great re-entry for anybody that is taking profits alongside of Wall Street. We'll be keeping an eye on that. We think Palantir's got a great future, got a great setup heading into the next leg of the markup campaign. But at this time, we would be expecting some sort of a pullback and some sort of profit taking. If we had been riding Palantir throughout this entire markup campaign, if we had held a position and we're sitting on a bunch of gains up here, we would likely set up trailing stops pretty aggressively at this point. A third of our position would be on a 2 to 3% trailing stop. A third of our position would be on a 3 to 5% trailing stop. And then the last of our position would be on a 5 to 7% trailing stop. That's just how we would handle our position, because when profit taking happens and when reaccumulation happens in a hot asset like PLTR, it's going to come fast, and retail's going to be the last one to find out about it. Wave 3 locked retail out. Wave 5 is pressing up into fib targets. That's where institutions will take their profits. Keep an eye out for an earnings-driven climax run. Look out for distribution. Look out for obvious tells. When it's provided, look out for a great entry at the bottom of this reaccumulation structure that's about to form. That's all the time we've got for Palantir this week. We'll see you next week.